The Absa Purchasing Managers Index has gone up to 52.2 index points, indicating a rise in factory activity. The September figure marks a second consecutive month of growth and is the highest level since October last year. The domestic market drove the recovery as global demand remained under pressure and is complicated by steep U.S. tariffs, a challenging trading environment, and lingering South African port issues, while business activity and new sales order sub-indices rose strongly, reflecting a domestic rebound. Respondents have noted slower deliveries caused by logistical obstacles such as export paperwork delays. We speak now to Absa CIB economist Andiswa Nondudule. Thank you so much for your time once again, Andiswa. The overall picture that this reading is painting, talk to us about that.
Thank you for having me. I think the overall picture that the PMI data is painting is obviously, I think, a positive one, given that we saw the headline index printing above 50, and also the fact that, the Q3 average is, above the 50 level and higher than the Q2 average, which is encouraging in terms of what we are likely to see for manufacturing output. And I think, obviously, as you've mentioned, that underpinning that improvement in the headline index was, the business activity index, which jumped by quite a bit, obviously supported by demand via the new sales orders index.
Seeing as this is ongoing improvement within factory activity in South Africa, the near-term outlook, is it just as positive?
The near-term outlook, not so positive, unfortunately, as manufacturers, they are a bit concerned, about the outlook for the sector, given the uncertainties within the global environment. And I think one of the other things that came out within the survey, which are quite disappointing, is the employment index, falling by quite a bit and remaining below that 50 level for the 18th straight month now. And I think what's that telling us is that, employment conditions within the sector are quite challenging. And I think we also saw that in Stats SA's quarterly employment survey that was released yesterday. We saw manufacturing sector losing about 9,000 jobs in Q2. And I think what this index is telling us is that we are likely to see further downward pressure on employment in the third quarter.
Having said that, what needs to happen in terms of South Africa buffering against that particular eventuality?
I think what needs to happen, for South Africa is that we need to have things that work, right? We need growth that is consistently strong. I think we were excited by the 0.8% growth that we saw for Q2, but I think we need that on a sustained basis. South Africa has been, oscillating around the 0 to 0.6% growth levels. So we need to sustain that improvement in growth. We also need investment in order to sort of yield employment levels. So I think a combination of those things is likely to sort of see the outlook improving for the manufacturing sector and for the South African economy in general.
Thank you, as always, for your contribution. Absa CIB economist Andiswa Nondudule speaking to us about the latest Absa PMI reading.